Hello, this is the Chart Profit video. Friday 6th of January. We are just over 30 minutes into the trading day. This is the pre-open today. We're looking at the E-mini S&P. We have this 3-month point of control here at 22.59, and I've said today that it has continued to attract time on Thursday, as you can see here, and it may continue to do so. Price relative to this level is important to monitor. Bulls would be hoping for significant buying marked above that level, and that would be a positive. So here's today's price action off the open. This is yesterday's, Thursday's. We closed up around 22.65, and we opened up here. Very quickly the E-mini was auctioned straight back down to 22.59 here. We're printing just a little above at the moment. So as I said, it may continue to find 22.59 more attractive. It's possible that a more important point of control is beginning to emerge here, a more important controlling price. If that's the case, we may see price oscillate around that. So let's use significant buying being marked above or below as some indicator of possible directional break here. One thing I've been talking about in the pre-open is the pulse chart recently, and specifically the price oscillator or the momentum indicator on the daily chart at the bottom here. So we have the spider at the top and this indicator here, and I've said that when this indicator turns down from an elevated level, it very often has a real tendency to return to the zero level, which is very close now. If we see the momentum break below zero on the daily chart, that would turn the trend by this criteria down. Bulls would hope that 22.59 holds, and we see this indicator turning back up. The breadth is still positive here. The green part of this chart here indicates the New York breadth indicators are positive. Those indicators taken from this chart, which is the New York breadth chart, and these bottom two indicators above their levels, which will give us that green bar. So breadth looks pretty positive. Price momentum, kind of watch this space at the moment. Been watching the sentiment recently, the Ridex assets ratio, my version of the Ridex assets ratio, and that reached 11.83 on Tuesday, which was the highest ratio since 2015. Has fallen back a little bit to 9.96, but this is a really high ratio. Here's the actual chart. You can see it's just come off a little bit here, just below 10, but this level here, the highest since June 2015. We look at the bear fund assets in isolation. You can see that they are very low right now. Hardly any traders within the Ridex universe expecting the market to sell off at this point. That can be a worrying development. But here we're looking at the bull fund assets in isolation, and you can see that having reached the highest level since December last year, or rather 2015, way back over here, bull fund assets have dropped pretty swiftly here. That's why the ratio has come lower. For whatever reason, a good number of Ridex traders have been a little spooked recently and have taken money off the table. Okay, here we're looking at the public poll from AAII. The bulls percent this week was slightly higher at 46.2. Bears percent was slightly lower at 25.2, so a slight increase in bullish sentiment here. I've just noted that 6 weeks ago here, the net, which is the bulls minus the bears, that reached 27.8 6 weeks ago. That was the highest since February 2015, so we had a high level of bullish sentiment 6 weeks ago that's tailed off a little bit, coming back slightly now as the market looks like it might break out higher. This one's a little more worrying. This is the Investors Intelligence, the newsletter writers poll. Bulls percent was higher this week at 60.2. That's the highest since July 2014. So more bulls in this poll for more than 2 years. The bears percent was lower at 18.5. That's the lowest since August 2015. And the net bulls minus bears at 41.8, which you can see here, the last little histogram bar there. That's the highest since May 2015. So this indicator is rather high, indicating a lot of bullish sentiment. From a contrarian point of view, it's often a warning. The US fund flows reported equity fund, including ETF inflows of 2.4 billion in the week to the 4th of January. The 4-week flow number in black here, it's kind of neutral, very close to the zero level. Looking at the spider here, on a number of charts we've seen a 2-month controlling price emerge, which may be useful to monitor in the short term. So we've got one here, 226, or just above is the 2-month. We're currently printing just a little above that at the moment. On the Russell 2000 ETF IWM, that level comes in at 136.70, and we are printing just a little below that level right now. Another useful chart to follow is the tech sector, XLK, and that 2-month has migrated to 48.96 here, and we're printing a little above that at the moment. UK FTSE 100 index has had a great run higher since it got over the 7-year and 6 months resistance that we saw here. This whole period through November, December, just the first part of December, was basically consolidating below those levels, which was potentially a really weak price location. But as soon as we popped higher from there, as that 6-month and 7-year kind of moved to that position, and then we saw price above, and we've really shot higher from there. FTSE closing at new all-time highs here at the moment. This is the bond ETF, T-bond ETF, TLT. This major at 117.15, in the scheme of things a really important level, as we've described over the last few weeks. The major point of control, going back many years on this chart, appears to have supported the decline, and we are seeing a little bit of a rally beginning here off that level. I reiterate, price back down below this level would probably now mark another bear move underway, but we are currently holding that position. And if I switch to a longer term, this is a weekly chart. You can see the weekly, we've got one example here, the stochastic momentum index turning back up. So we're seeing the technical oscillators on the weeklies turning up here. Just zooming out, you can see where that major point of control was built way back in here, a little more here, a little more there. I actually calculate those controlling prices from half-hour charts and daily charts. It's very clear that this is the major level. So as I said, price below here would be a real concern, but we are bouncing a little bit. GLD, the gold ETF, although there's no obvious or major support down here as we have on the TLT chart, it is also coming back a little bit. The next test, as we've mentioned, is the halfway point here. That's the natural resistance, or the halfway off this November low to this high, just below 116. Fast real indicator of longer term strength for GLD would be time or price printing time above that level. Currently in the longer term time frame, are still in a pretty weak position here. No change in the major support here at 1078 on the oil fund ETF USO. I thought actually that might have migrated a little higher up to here or something, but that hasn't quite happened yet. So this is still our major support, and as long as USO holds above that level, it's in a strong price location longer term. Just a few days ago, the dollar index hit its highest level for many years. Up here, we've sold off that just a wee bit. We're down at an 18-day low here. Many weeks ago in the webcast, I was talking about a target for the dollar index based on distributions up around 103, 104. So we have to look at the possibility of weakness here. An indication will be, we can see at the top here, the oscillators. This one again, the stochastic momentum. Usually when these technical oscillators get oversold in an uptrend, you'll see a pretty swift reaction on the chart. We'll see the chart coming higher. So an indication of weakness is often indicate it gets oversold. We don't see much of a bounce, it gets more oversold. We still don't see much of a bounce, then we get a little rally, that kind of thing. But you're relying on that kind of pattern simply because at the current level don't have any clear halfway points or controlling prices to sort of key from. So we'd be looking at that sort of evidence that the trend is breaking down. And we'll look elsewhere, for instance here on the pound dollar chart. Here's a level we've had for a few weeks. This is the 10-month point of control here at 124.19, and we can see that the pound moved into a weak price location here, and just on Thursday we saw a rally back to that level, which has obviously been rejected almost exactly at that point. So This is now proven resistance, and if we see price back above here, and that would be an indication of strength for the pound here, and in this pair, weakness for the dollar. As you can see, it doesn't seem to be the case at the moment. Now the test would be this chart, the Australian dollar, just ignoring the levels up here, the resistance. We're looking at the halfway point from this important low here to this high here. You can see we had support right here, and possibly we have resistance here. So price printing time back above here, again strength for this chart, weakness for the dollar, and again we're not quite seeing that yet. Finally, the Euro FX chart hit a new low just a few days ago, and based on the current distribution, long-term distribution, of a target down here, 1.014, which is quite within the reach of this chart. If we see another leg down. A final look at the E-mini S&P on this 5-minute chart. We're just over an hour into the trading day, and we did in fact probe this 22.59. So we should look at price relative to that level as a guide to short-term strength weakness today pre-open, and we just probed it and we have rallied back, and that's the sort of reaction you want to see at one of these points of control. So we're looking pretty safe at the moment. Price printing time down here, first indicator of weakness in the short term. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.